Yeah, that's right, Scott. But look, pressure could be building on company bottom lines here. And the reason, as you said, are the two big inflation reports this week showing consumer prices moderating, but wholesale prices, well, they continue to surge. If prices can't be passed along to consumers, margins could suffer in the months ahead. Joel Nareff of Nareff Advisors writes after the report, increasing producer costs are pressuring businesses in every nook and cranny of the economy. Up until now, companies have mostly been able to pass along their high costs to consumers and then some. That's what Scott's talking about. That's led to expanding profit margins. The question is, how long can they keep raising prices? Starbucks said in its earnings call late last month, quote, while we're thrilled with our margin performance in Q3, we expect it to moderate slightly in Q4, primarily due to the growing impact of inflation, coupled with incremental investments critical to our continued growth. The stock off 8% since that call. Now, what we're able to do is compare two parts of the consumer and producer price index. They show the CPI rising faster than the PPI for the past several months. And that helps explain how have companies been able to boost profits amid their soaring input costs. They raised their prices more than their costs, but CPI moderated in July. PPI continued to accelerate. Many companies in their call said, hey, they think the inflation problem is going to linger into 2022. And they were also confident they could pass these costs along. Mike England of Action Economics tells me, with shortages across a wide array of products, it's likely that retailers are able to sustain their markups or even add to them during this post-pandemic rebound. All right, companies can offset some of these cost pressures. They can cut costs and find greater efficiencies, but eventually something's got to give. Either input costs start to fall or consumer prices rise. If not, Scott, profits are going to be hurt.
Right, but right now, I mean, the market seems to be thinking that, okay, margins are going to hold, and investors are giving Powell and company the benefit of the doubt that what they've said so far is going to hold true and that they'll be able to manage it, and the stock market is going to hang in. There's no other way to see it. I mean, you can't set records every day if the market is overly worried about inflation being even more sticky than it already is for longer than some assume that it's going to be.
Right, but here's the issue, Scott. How long can consumers continue to, pay higher prices? Right now, what I think is happening is all of the stimulus money has boosted savings. We see that in the data. And consumers are able to use those savings to paper over higher costs. Eventually, some of that runs down. Now, of course, more people go back to work, but you can't just keep raising prices. Either something's got to give in this way. You can't have a temporary inflation story, or the idea that inflation is going to roll off later this month if you still have these rising producer prices.